We'll be going over IRS Form 1099-OID, Original Issue Discount. So this is a tax form that many taxpayers may receive at the end of the tax year without fully understanding exactly what it is. So let's start by talking about original issue discount. Then we'll go through the information on the left-hand side of the form, and then we'll go through the information on the right-hand side of the form and cover each of those boxes one box at a time. We'll walk through what the instructions are for the issuer, which is usually going to be a financial institution. It could be your bank or a brokerage firm. And then we'll go over certain instructions to taxpayers on how you would report certain items of income and where on your tax return. We won't be able to cover every single situation, but we'll at least be able to point you to the right direction for further guidance. So let's start by talking about original issue discount. Original issue discount, or OID, is the excess of an obligation's stated redemption price at maturity over the issue price or the acquisition price for a stripped bond or coupon. So basically, if you are familiar with those treasury bonds where they said $100 on them, but you ended up having to pay $50 for them, and then you had to wait until a certain maturity date for it to reach that $100 value. And if you cashed it in earlier, then you'd get less money. That's a type of OID. And that actually happens to a lot of U.S. Treasury bond obligations. So if you're the kind of person that has lots of Treasury bonds, you are probably more familiar with this form than other taxpayers. So let's walk through the left-hand side of the form, because this is basically the taxpayer information. At the top, you're going to have the name of the payer, which is usually the financial institution. It can be someone else. It could be a brokerage firm. It can be a middleman. There are certain other organizations or type of institutions that would be considered a payer in this circumstance. So basically, you would verify that information on the left-hand side, make sure that it's correct. We're looking at copy B, which is the recipient's copy. So this is the copy that you would expect to receive. There are actually up to 5 different versions of this form. So in this version, the taxpayer's identification number for the payer, you'll be able to see that. Your taxpayer identification number, which can be a social security number, individual taxpayer identification number, an adoption taxpayer identification number, or for estates and trusts, it can be an employer identification number, or EIN. So on your copy, that number will usually be truncated. So you might see like the last 4 digits of your social security number here. But on the version that goes to the Internal Revenue Service, which is this red version right here, this will always be reported in full. So as I mentioned, there are 5 different issues. Copy A is for the IRS. Copy B is for the recipient. Copy C is for the payer's records. And then you'll see we're on copy 1. If you live in a state where you're subject to state income tax, you might receive a copy 1 and a copy 2. Copy 1, you probably won't see that. That gets issued to the relevant state department. And then copy 2 will be your copy that you receive that you need to file with your state income tax return. All right, so let's go back to this. What you're going to want to make sure is all of this is accurate. If you don't provide a taxpayer ID number, or if you provide an incorrect taxpayer ID number, then the payer will have to withhold income tax under rules that are known as backup tax withholding. We'll get to that when we talk about box 4 momentarily. So if we go further down, you'll want to verify that your address is correct. If it's not correct, or if you either have recently moved or if you plan to move in the near future, you should notify the institution that's issuing this form. You should also notify the Internal Revenue Service. You can do that in a number of ways. You can also file IRS Form 8822, which is your change of address form for businesses or for estates and trusts. You would use IRS Form 8822-B, which is the business change of address form. So you can make sure that your information is correct here. There probably will not be a check mark in this box. This is the FATCA filing report requirement. So this is a box that is checked if either the payer or if you as the investor are subject to certain foreign account tax compliance rules. So that's basically what FATCA is. And if you see this box checked, you may need to adhere to certain foreign reporting requirements. So you shouldn't see that. And if you do, you should probably have your tax professional handle the reporting for that to make sure that you're in compliance. And then finally at the bottom, an account number may appear here. The IRS only requires an account number if the financial institution is issuing more than one Form 1099 to the same taxpayer, and it covers different accounts. So if, for example, you had an OID issue treasury bond in a joint account, and then you had your own investment account that's under your taxpayer ID number, then you would possibly see two different forms. One would have an account number for the first account, and then the other one would have the account number for the second account. So that's how that would work. All right. So now that we've covered that, again, you're going to want to make sure that your information is correct. If you absolutely should provide a social security number or a taxpayer identification number, so you'll want to make sure that this is correct. Let's go on to the right-hand side of the form, and we'll break down each of these boxes. So in box 1, this is the original issue discount for the year. Now this might not be the amount that you report on your income tax return, but this box 1 amount will contain the original issue discount as a taxable obligation. So you should most likely report this box 1 amount as interest income. However, there are certain factors that may come into play. So the type of debt instrument, the issue date or the acquisition date, and whether or not you paid an acquisition or a bond premium. If it's a stripped bond or a coupon, you're going to probably need to do some offline calculations to determine the amount that you report on your 1040. There's an IRS publication, IRS Publication 1212, that walks taxpayers through how to calculate the correct amount of OID to report on their tax return. In box 8, this is other periodic interest. So this would be an amount that is interest income, but it's not necessarily OID interest. So if you held the obligation for the entire year, you'll enter this as interest income on your tax return. If you either sold it during the year or somehow disposed of it, or if you acquired it from someone else during the year, then IRS Publication 550, which discusses investment income and expenses, will go into further detail on how to account for that based on your tax situation. If there's an amount in box 2 and then box 8, then this means that that amount is from a U.S. Treasury obligation. So like T-bonds, TIPS, those are the Treasury inflation protected securities. Uh, those bonds are exempt from state and local income tax. You'll still pay federal income tax most of the time unless you meet the requirements for claiming or for excluding the interest in your taxable income because of education expenses. There's a different form that you would file for that, and we'll put a link to that in the show notes. So if box 2 and box 8 both have some information, that's what it refers to. If there's an amount in box 2 and then box 11, then that means this amount is tax exempt interest. So you won't include it in interest income in your tax return, but you'll still need to report it as tax exempt interest because there are other tax and Social Security applications for that type of income. In box 3, this would show an early withdrawal penalty. So if you had a CD and you redeemed it early, this would be the amount of either principal or interest that you forfeited. You can actually use this to deduct. You can deduct this from your adjusted gross income on your income tax return. You would most likely do this on Schedule 1. So we'll put a link to an article that we've created for Schedule 1 in the show notes. In box 4, this is where you would see backup withholding. So in this case, $50 was withheld for tax purposes. The payer does not have to do backup reporting unless you gave them an incorrect taxpayer ID number or if they do not have one at all for you. And in that case, they're subject to certain backup withholding rules. Generally, you would include this amount as taxes paid on your income tax return. Box 5 is the market discount. So if you got a bond or a CD that was on the market that was less than its face value, then you may need to include that in income as it accrues, unless you make a certain election in accordance with the Treasury regulations. Basically, if this is tax exempt OID, then the market discount would be applied for that entire year. The issuer may report a market discount for a tax exempt obligation for a covered security on your tax return, but if you acquired it before January 1st of 2017, but does not necessarily have to. So market discount can be a little bit tricky because you need to have specific knowledge of what type of security you have, whether or not it's a covered security that was acquired with OID, and this is something that you should definitely talk with your tax professional about if it applies to you. Most of the time, it doesn't apply to most taxpayers. On the flip side, acquisition premium would be the price that you paid above the face value. So in this tax form, obviously you can't have a market discount and an acquisition premium, but it works the other way. If you had to amortize a discount as part of your income every year, the premium actually reduces your income a little bit every year. And you would need to account for that when reporting your entire interest income for the year. And if you acquire this at a premium on tax exempt, it actually reduces the amount of tax income that you're reporting as well. In box 7, you're going to see a description. It could be the identification number, also known as QSIP for fixed income instruments, or it could be a simple description of the obligation, where it might show the stock exchange, the issuer, the coupon rate, and the year of maturity. Box 8, if you see anything reported here, this is the OID on U.S. Treasury obligations, like Treasury bonds. So you would report this as interest income on your federal tax return, but you don't need to include it, or it's exempt from state and local taxes for income tax purposes. If there's an amount here, it is not included in this amount here. So basically, this form reads that you received $1,000 of OID income, you received $500 of other interest, and then there was a $20 OID on the U.S. Treasury obligations on top of it. Again, this is kind of a hypothetical situation, so we've only put values in each of these boxes so that we can go over them in depth. Most tax forms, you're only going to see a value in a couple of these boxes. So in box 9, these are investment expenses from a single class real estate mortgage investment conduit, also known as a REMIC. You're most likely not going to see this unless you know what a REMIC is. So this amount actually is included in box 2. It's not deductible. So you do have to include that in your income for tax purposes. And the reason why is because a REMIC basically passes all of its expenses on to the different investors. So it's already accounted for the expenses in terms of their deductions. You have to report this as part of your income. In box 10, this is the bond premium. For a taxable covered security, including tips, this would show the amount of premium that's amortized, allocable to the interest payment. So if there's a report in this box, you'll be reporting it on Schedule B. And there are instructions in Schedule B to cover this situation. If an amount is not reported in this box for something that you acquired at a premium, and the payer is reporting a premium amortization, which means they're accounting for it, then that means they just netted the amount and put the difference here. So there may be a situation where you don't see this $100 premium because they've already taken it out here. So if there's an amount both in box 10 and box 11, then that means the box 10 amount may reduce your tax exempt interest for the year. The payer in this situation is not required to report the premium amortization for a tax exempt obligation if it was acquired before January 1st, 2017. Anything afterwards, you would see the tax exempt OID. Boxes 12, 13, and 14 they're specifically for state purposes. Each box has the room to be able to hold up to 2 states worth of information. Texas and Florida are states without a state income tax, so you would never see this reported. But in box 12, you could see 1 or 2 state 2-letter abbreviations. The state identification number is what the state's identification number would be for the institution that's issuing this form. And then if there were state income taxes withheld, you would see that reported here in box 14. So most taxpayers generally would not have to worry about original issue discount. The vast majority of those who do probably only need to worry about one or two boxes, and virtually everyone else, for more complicated matters, is probably going to have an accountant that walks through this paperwork with them. However, it's important to know, kind of have a layman's idea of what each of these concepts is. So if you want to dig more into this, we have written an article that covers this in depth. You can find that on our website. So simply go to teachmepersonalfinance.com, type in IRS Form 1099-OID. You'll see our article here. And this is part of a series that we're producing on different types of Form 1099s that you might see at the end of the tax year. So keep that in mind. If you like our articles, please feel free to subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. If there is any tax form or tax topic that you want me to cover in more depth, please hit me up in the comment section. I read them every day, and I do my best to provide a research answer to anyone that asks. So if there's a topic that you'd like me to cover in a future video, please let me know. Thank you very much and have a great day.